Welcome to the Gann Technical Analysis series for beginners. In this video, we are diving deep into the swing chart. The swing chart is Gann's #1 tool. In all of his training seminars and workshops, he always began teaching with the swing chart. Everything begins and ends here. And in this episode, we're going to talk about why the swing chart is important, how you can use it in your trading and investing, and I'm going to teach you how to draw the swing chart for yourself. So let's dive in. Okay, first of all, let's talk about why it's important to use a swing chart. There are many reasons, but to name a few of them, first of all, it helps you remove the noise so that when you're looking at the chart, it looks a lot more clear. You can see the swings and the trends a lot simpler. The next reason is it helps you to trade with the trend. Remember, one of the key rules in trading and investing is the trend is your friend. You want to be a bull in a bull market and a bear in a bear market. The swing chart helps you identify these trends early. Perhaps the next two reasons are the most important. The Gann swing chart is layer 1 in which all other indicators are stacked on top of. Whether you want to look at the support and resistance, the 50% tool, the trend lines, the time counts, the overbalance, it all begins with the swing chart. And lastly, it is the single source of all input data that you need for any mechanical trading and investing strategy. It's going to help you create a rules-based system that's going to give you all the information such as your entry price, your stop loss, your profit targets, your exit price, and your trailing stop loss as well. It all begins and ends with the swing chart. To give you an idea of what the swing chart looks like, let's look at Bitcoin on the weekly chart. Here you can see a normal candle chart of Bitcoin, and here is the swing chart. So we've removed the candles and we've added bar charts, and I'm going to explain why in a minute. What's important to notice is what the swing chart does is it really captures the swing highs and the swing lows, and that's going to be the foundation for which all other indicators are stacked on top. So let's talk about how to draw a swing chart. As I mentioned before, we're not going to be using candles. Instead, we're going to be using bars. And the reason for doing that is because what's important in drawing a swing chart can all be found in the bar chart. The candles only add more information that's unnecessary and actually make the chart look a little bit too busy. What's important in the swing chart is the high, the low, and the close. There are 4 different types of bars in a swing chart. The first one is the up bar. The first bar in this series is the reference bar, and the second bar is the up bar. You can see the low is higher than the previous low, and the high is higher than the previous high. This turns the swing direction up or keeps it up, depending what's happening in the current swing. Next, we have a down bar. A down bar is when the high is lower than the previous high, and the low is lower than the previous low. This turns the swing direction down or keeps it down, depending what's happening in the swing. Next, we have an inside bar. Here's the reference bar, and here's the inside bar. You can see the high is within the bar, and the low is also within the bar. It doesn't move up, doesn't move down. The swing direction doesn't change. Everything stays the same. And then finally, we have an outside bar. So an outside bar is when the low exceeds the previous low, and the high exceeds the previous high. These are the trickiest bars you have to pay attention to because it can actually change the direction twice depending on what's happening in the current swing. And how you tell that is where it closes. If it closes higher than it opens, then we assume that it first moved down and then up. If it closes lower than it opened, then we're going to assume that it first moved up and then down. Let's look at an example of an outside bar. So here you have your reference bar, and the second bar is your outside bar. See if you can figure out what this does to the swing direction. You got it? Right. So what you want to do is look at the close. If it closes lower than it opened, then we assume it first moved up and then down. And then after the outside bar, we have a down bar. So the swing direction continues down. So what does that look like with the swing overlay? We have from the reference bar, we move up to capture the high, and then when the swing direction turns down on the close, you can see outside bar up, down, and then continuation down. So let's look at an example. This is a series of bars. We have first the reference bar, then we have a down bar, another down bar. You can see the low exceeded the low of the previous bar. Then we have an up bar, followed by another up bar, inside bar, nothing changes, and then we have an outside bar. You can see the high just exceeded the high of the previous bar, and then continuation down. So what does that look like with the swing overlay? Okay, so reference bar, first bar is down, so we're going to capture the high and we're going to move it to the low. Next bar comes in, another down bar, move it to the low. Then we have an up bar, we're going to move it to the high of the up bar, followed by the next bar, we're going to move it to the extreme high. Inside bar, nothing changes, so we wait for the next bar. And this is an outside bar, where at this point, the swing direction is already high, so we don't need to move it to capture this high. Remember, the most important part of this swing chart is to capture the extreme highs and lows of the swing, because this swing is higher than here, and the swing direction is already moving up. We only capture the swing change when the outside bar closes low, and then we capture that new low. So what's so important about all this anyways? Remember in the beginning I said, one of the main reasons is to trade with the trend, and the swing chart helps us to identify the trend. A trend is defined as higher highs and higher lows to define an uptrend, and lower highs and lower lows to define a downtrend. So if you're watching and tracking the swing chart, you will know the exact moment when that uptrend or downtrend is confirmed. And these are going to give you your entry and exit signals. So let's look at an example together. So here we're looking at Bitcoin on the weekly chart. We're going to use a starting point of this high. So this is going to be our reference bar. So we're going to construct or draw the swing chart on top of these bars. I've made the bars a little bit thicker so you can just see what we're doing here. Okay, so from the reference bar, we have a down bar. The high is below the high and the low is below the previous low. So we're going to draw from the top and we're going to capture that low. The next bar is another down bar. So we keep drawing. The next bar, keep moving it. And finally, we have the first low. But we don't know that at the time. So all we're doing is we're tracking the highs and the lows. So the next bar you can see is an inside bar, so nothing happens. Next bar, inside bar, nothing happens. Next bar, we have an up bar. Up bar was going to change the swing direction up. So let's capture that high. So now we have, as soon as this bar exceeded the previous bar's high, we have a confirmed bottom in the market. Let's keep drawing it. Now we have an up bar. Okay. Now we have a down bar. So this is going to change the swing direction. So now we go from the top down to the low. Now you can see we have a confirmed top in the market. So we have a low and a high. So the next bar, up bar. So that's going to change the swing direction again. So now on this bar, we have a confirmed uptrend. We have one low, a higher low, we have a high, and as soon as that high is exceeded, we have a confirmed higher high. So that is the exact point that the uptrend is confirmed, as soon as that high is exceeded. Let's keep going. Next bar, up bar. Next bar, up bar. Okay, we have an inside bar. Inside bar does nothing. Here we have a slightly higher bar, a slightly higher up bar, but remember we're trying to track the tops and the bottoms. And since this high is higher than this high, we're going to leave it as is. Next, this is actually a down bar. You can see the low has just exceeded the previous low. So we have a swing direction change. This is going to come down to here. And then we have an up bar. Swing direction goes up. And then we have a down bar. Another down bar. Keep going. Then here we have an outside bar. Let's zoom in on this. Here we have an outside bar, and what's important is to focus on the close. Since it closed lower than it opened, we're going to assume that first the direction went up and then it went down. So we need to capture the swing up and then the swing down. Okay. Next we have an inside bar, nothing happens. Now we have an up bar. And we're going to keep going like this until we've captured all of the swing direction changes. Okay, here we have an up. Here we have our swing overlay. As I mentioned before, using our swing overlay, we can now start to layer other indicators on top. We can also determine when the trend turns up, when the trend turns down, and it gives us our entry signals. For example, I'm not going to go deep into a strategy, but I'm just going to show you a very basic Gann strategy of going long when the trend turns up. So as I mentioned before, this is going to be the first entry signal when this swing top is exceeded. You have your entry, you have your stop loss is going to be below the previous swing, and you're going to trail your stop loss behind the swing lows. So let's just look at a basic trade example. Here you have your entry, there's your exit there, there's your stop loss there. So you can see about 1.5 risk to reward ratio. Okay, not bad. Next, let's look at this trade. So now we're going to re-enter on the next confirmed uptrend, okay, because we want to go long. So you can see the next swing top is broken on this bar. Here we have a swing low, a higher low, we have a swing high, and as soon as that is exceeded, we have a confirmed uptrend. So we're going to go long, we're going to have our stop loss here, and we're going to exit when the next swing low is broken, which is on this bar, and this low is broken. So let's look at that again. This is what the trade would look like. Exit is there, stop loss is there. So here you can see we have about a 3-to-1 reward to risk, which is pretty good. Now let's look at the next trade. We want to long on the next confirmed uptrend. Where does that happen? Here's where we exit the trade, and then we have swing low, higher low, swing high, and then it is confirmed on this bar. We have our entry price, stop loss, and remember we're going to exit on the next break of a swing low. So if you were around in the market at this time, this is the COVID low, and then we all know what happened next. The next swing low was not broken until many months later in April. So if you entered on this swing high, you would have been holding that position until you exited around here. So again, what would that look like? Exit price is here, stop loss is here. So that is about a 350% return or a 13-to-1 reward to risk ratio. So that about wraps it up for the first video in the Gann Technical Analysis series for beginners. In this video, we talked about why it's important to use the swing chart, and we went through some examples of how to draw a swing chart, the different types of bars, using the swing chart to identify trends, and using the trend in some example trading strategies. I really hope you were able to see just how important the swing chart is and why it was Gann's #1 tool, why he began and ended every workshop and seminar with the swing chart. It really is the foundation in which all other indicators and all strategies are built on top of. Throughout this series, and for all my videos in the future, I'm always going to be coming back to the swing chart. In fact, to give you an example of just how powerful it is, most of my trading systems rely only on the swing chart, not any other indicators. Investing is a little bit different. It includes a little bit of time and cycle analysis, but in terms of trading, this really is the most important tool. And if you're to take away anything from my channel, let it be this. Trading and investing doesn't have to be so complicated. In fact, it can be very simple. So I really hope you found value in this content. If you did, feel free to like and subscribe, share it with your friends, and stick around. And until next time, take care.